Hey, what's up, guys? This is Cody the Coin Raptor, and welcome to my channel. I'm here to provide you the best crypto content you can find. And today we're talking about macroeconomics and how that affects crypto. All right, first thing I want to show you is Bitcoin dominance. Bitcoin dominance has fallen off the map. It has fallen off the map. It is at 40% right now. And previously, the high was 48%. Now, that was made back in June. Now, most people are getting out of Bitcoin. They're getting into altcoins. They're getting into stable coins. And we can see that with our Ethereum price. Ethereum has been on fire. Right now, it is pushing for almost 1900. It's at 1879 right now. And I think that it might have the legs to go and touch $2,000. I think that's entirely possible. That would be the next target for Ethereum. It's looking a little overbought right now at the daily. If you look at the hourly, it's looking way overbought right now, but it's got legs. There is some serious volume coming in here to push Ethereum higher, and it could potentially go up to 2,000. I think in the short term, it's probably going to downtrend a little bit. The sellers are going to come in. It's going to chop sideways for a bit. But overall, this chart looks extremely bullish right now. Okay. Now we take a look at Bitcoin. Bitcoin also looking bullish, but it's not as strong as Ethereum. Like I was saying before, your Bitcoin dominance has gone down significantly. And on top of that, there are a huge, just like a wall of sellers right here at about 24,200, which is almost where it's at right now. And Bitcoin has had a hard time pushing through this wall. If we go out and we check the daily RSI right now, Bitcoin has had a really hard time pushing out above about 61 level or so. And right now it's at 59.8. So it's very close to that level where it gets rejected many different times. And again, not super surprising considering the fact that a lot of the volume is just going outside of Bitcoin and going into stablecoins or Ethereum or any other altcoins. So what's the reason for this big move today? Well, the consumer price index came out today, and for the month of July, it came out at approximately 8.5%, okay? And that's in comparison to the previous month where it was 9.1%. So it did come down month over month, all right? One important thing to point out about this, though, is the all items less food and energy down here. That's something that the Fed really pays attention to. This is 5.9 right now, and it has not really gone down month to month. It's stayed about the same. Most of the decline came from energy, which was down significantly. When you look at energy, it was down minus 4.6%. But you look at the all food, less items and energy, that's mostly even. But either way, the broader market for stocks and crypto have taken this as a positive, because what it means is that we might be on the other side of inflation, and the Fed might not have to raise interest rates as much or as quickly, the so-called Fed pivot. And that would be incredibly bullish for Bitcoin and the stock market. So Bitcoin and cryptocurrency. All right. One other thing I want to point out is that the Atlanta Federal Reserve Bank came out and they had an estimate revision for Q3 GDP. So the Atlanta Fed had previously come out with an economic model that had the second quarter as being negative before that was officially announced. So I think that their model is actually fairly accurate. And so now what they're saying is for the Q3, their latest estimate is 2.5% GDP growth, which they brought up from 1.4% on August 4th. Now, I think this is huge. This is really huge news here, because if it is 2.5% for the month of, or for the third quarter, we can take a look at and see how that compares to the first quarter and the second quarter. So the first quarter and the second quarter was minus 1.6, second quarter was 0.9. Now, when you add those together, you get negative 2.5, all right? So if you see where I'm going with this, that would mean that if the Q3 numbers come in at negative 2.5, or they come in at 2.5, and the previous two quarters came in at negative 2.5, they would essentially cancel each other out. So in Q4, if we get any sort of growth and this happens, that means that the full year's GDP will be positive. And the reason why that's so important is because if we take a look at the GDP by year, we can see that some of the worst recessions that we've had recently have been they've had negative GDP growth for the year. So if you look at 2020, that was negative 3.4. We look at 2008, that was negative 0.1. You look at 2009, that was negative 2.5%. And if we come in at a positive GDP number for the year, that would ultimately be very bullish, in my opinion, for both stocks and for crypto. Because what that would mean is that we're avoiding the worst case scenario, and the worst case scenario would be a deep recession. So the way I see it is, if it comes in and it's not a deep recession, that means that we possibly have already seen the bottom. The June low would have already been the bottom in this case, because we come out and we have positive GDP growth for the entire year, and that would be very strongly bullish for Bitcoin and cryptocurrencies. Okay? I'll be watching this information. I'll be trying to give you the most up-to-date information that I can. In order to see that information, check out my Twitter. Follow me on Twitter. Follow me subscribe to me on YouTube. I'd greatly appreciate that. Leave a comment. Let me know what I'm doing, what you don't like, what you want me to cover. But this understanding the macro picture right now is essential to understanding where the cryptocurrency market is going. Okay, because they often go in sync with each other. All right, so that's all I've got for you today. This is Cody the Coin Raptor signing out.